guys, I'm Anisha Gupta and we are putting spotlight on gold prices this time around, where after the flash crash on the previous week when the gold prices fell all the way to $1,675 per ounce, we have seen nearly $100 of a jump up coming for gold, and that makes it very lucrative on the technical charts. The second thing is that the fundamentals seem to be turning up as well. Let's take a step back and look at the previous year. Gold prices hit an all-time high in 2020. That was because the COVID cases were rising. Most countries were in a shutdown mode. The economic data was on the weaker side. There was a lot of uncertainty and there was a huge stimulus and liquidity coming into the markets, and gold was a sole beneficiary of that, and we saw all-time highs in gold in nearly 70 currencies in 2020. Since then, especially in last couple of quarters, it has been about data getting better. The economies have started opening, and even as there are fears about the Delta variant COVID right now, a complete shutdown in various countries is something that the markets are not working with. And you have seen competition between asset classes. We've seen money going for various other asset classes also, is the reason that you haven't seen gold prices continue to run up. But from where we stand right now, the economic numbers have started to come in on the weaker side yet again. The US consumer confidence numbers are the lowest in a decade. The Chinese numbers, the data that has come in today itself, whether it has been manufacturing numbers or the fixed income data, has been on the weaker side. The manufacturing activity actually has surged at the lowest pace in last 11 months. So that has been supportive. So the markets are looking at uncertainty because of economic growth, because of the Delta variants. And apart from that, it also has been the US dollar, which is off 4-month highs. We have seen the treasury yields decline. That has been supportive as well. And then the physical buying is back into the markets, especially in India, China. India, where we are seeing wedding season, festival season underway, the physical buying has been picking up. Also the investment buying, so whether it has been ETFs, sovereign gold bonds, digital gold, e-gold, the buying has been quite strong here as well. And then the central banks have been buying also, including India, where the Reserve Bank of India has increased gold purchases as a part of its forex buying there. So in the first half of 2021 itself, the gold buying has been the highest year on year at around 29 tons. So the RBI gold holdings as of now stand at 705.6 tons, and the gold holding in 2018 was just about at 558 tons. So the last 2 or 3 years have been strong, and the first half of this year definitely on the positive side. What the gold will watch out from here on is going to be the geographical implications of as the Afghan government collapses. So there are also those geopolitical implications that we will see come in here. And then it is going to be the Jackson Hole meeting on 26th to 28th of August. That would tell you on what the US is thinking, what the US Fed could be doing. So in sense of interest rates, labor markets, inflation, all of those cues, or any of those cues that would come in from Jackson Hole meeting, will tell you on where the gold is headed. But as I said, the fundamentals are supportive, and on the technical charts, we've seen gold prices gain up. So if the current levels of $1,780 per ounce hold, then we're looking at 1810, 1850 and levels higher than that. In the Indian markets, well, until the gold prices see those levels of around 46,500 rupees per 10 grams hold, the expectation is that we are headed on the higher side from here. Various brokerages tell us that 48,000, 49, even 50,000 is a possibility, depending on what kind of data and events unfold in the forward months.